Today I'm talking about the naked short selling of shares. This is a process that happens all the time on Wall Street. It's a process that I think is fair to associate or call out to the Occupy Wall Street movement, as it is, I think, demonstrably a type of fraud that is being conducted by Wall Street upon those buyers and sellers of shares that aren't even aware of its existence. Um, the legal challenges in bringing it into courts are notoriously difficult. The evidence is essentially held by a private company, the DTCC, which is the Depository Trust and Clearing Company, which is a private company that handles all of the transactions, or at least a very large majority of the transactions for stocks on Wall Street. So to go back to the basics, let's look at the markets. We can buy and sell. We know about buying and selling, basic processes. We can short sell. If you think that a price of a share is going to go down, you can sell prior to buying. And the way this works is that you do not own a share, or you might, but it's irrelevant. You borrow a share from your broker, and you sell that share out to somebody on the market. You bring in the money. You owe your broker. You're on margin. Then later on, you need to cover your share. So you buy back a share from the market and you return that share to your broker. It kind of works. It's not really a problem. Now there's a difference here between that and naked short selling of shares. Now naked short selling of shares, you do not own and you have not borrowed the share that you are selling out into the market. So you take the buyer's money, but you do not deliver a share. Now, technically, according to the rules, you have T plus 3 days to actually deliver a share, and T is the trading date, and then 3 days. If you do not deliver a share in that time, then it's called a fail to deliver. Now, one of the disturbing things about this is that as a buyer of shares, you or I don't get to know whether our share has been delivered. Now, this is something that's kind of special about the financial markets. It would be quite obvious pretty quickly if you went to the store to buy an apple and you gave them your money for the apple and you got no apple, that there was a problem here. But in the financial markets, you go to your brokerage account and your brokerage account says that you have a share of some company. You have no way of knowing whether you actually have been assigned a share or whether there is a fail to deliver in this case. Now, the SEC says the following, and this is where the SEC is basically telling us that this process is different than other processes. And the SEC says, in addition, where a seller of securities fails to deliver securities on settlement date, in effect, the seller unilaterally converts a securities contract into an undated futures-type contract to which the buyer might not have agreed or that might have been priced differently. So what the SEC is saying here is that in the case of a fail to deliver, the seller is arbitrarily selling something that is different than what the buyer thought that they were getting. The buyer thought that they were getting a share of stock. And the seller says, well, we're going to sell an undated futures type contract to this person that says that we will get them a share of stock in the future. Now, that's not what the buyer expected. And that's not what the buyer expects when they look in their brokerage account and they see that they have some number of shares of stock. They expect that they have those shares, not undated futures type contracts that reflect those shares. Now, things on the markets are priced with risk calculated into the value of the whatever it is you're buying and selling. If you have a share of stock there is no risk of you losing that share of stock unless you choose to sell it. If you have an undated, okay, if you think you have a share of stock, but you really have an undated futures type contract that represents the potential of a share of stock somewhere in the future, there is a risk that you could not receive that share of stock at some point in the future. So, oh, the camera just fell over. Apparently apparently I was not taking into proper account the risk of camera collapse in my environment, but we'll forget it and go on. Now, in this case, what we have is we have a buyer who believes that they have a share of stock in their account, but in fact they do not. They have an undated futures type contract where the seller is expected in the future to deliver a share of stock. Now, the SEC says in that quote that the share of stock and the undated futures type contracts might have been priced differently. And this makes absolute sense because prices vary based on the risk involved in item 1 versus item 2. In item 1, a share is delivered. That's it. There's no risk that share is not going to be delivered. The share has been delivered. In the undated futures type contract, though, the share has not been delivered. Now, risk. What happens if the broker or hedge fund that has sold the undated futures type contract goes bankrupt? There is now nobody to deliver a share. And so this is what I would say is an example, at least, of the heightened risk between the actual delivered share versus the failed naked short share. Yet the buyer does not get to have the information about which one they actually have. So this is, in my mind, a problem. I think that the definition difference between a share and the undated futures type contract is pretty much indicative of a kind of fraud. And the SEC wants to play really nice with the big brokers, and this is a problem. And so, one, I would say we need disclosure. We need a lot more disclosure. We need the DTCC to be cracked open and make available the data so that watchdogs and free individuals can actually access some of the kinds of data that up till now basically only the brokers can see as a kind of elite, group of people that have advanced knowledge of what's going on behind the scenes in the markets. We know that naked short happens. It's not a fantasy, and we need some clarity. So that's, I guess, my spiel at the moment, and thanks for listening. Bye-bye.